Good morning, everyone. This is Ryan Edner with your Wednesday, September 26th morning market commentary. Once again, here today we're finding ourselves where trade headlines are the number one factor guiding the grains. So again, let's start off in corn here. This whole week, corn's been waiting for a trade headline from either Canada or Mexico. Going into a bit more detail there, we are still most concerned about our exports to Mexico, but again, they would like to see Canada on board, so that's why we're trying to reach a deal by the end of this week with Canada. But it was mentioned back on Monday that maybe we would reach a one-on-one deal with Mexico even if we cannot reach a trade deal with Canada. So as far as corn is concerned, Mexico is our main objective. So if we can reach a one-on-one deal with them, while it may move other markets around not to reach a full NAFTA deal, for corn specifically, Mexico is what we're most concerned with. So we'll look for a trade headline from either group by the end of the week. Funds continue to slowly liquidate short positions in corn. We've seen open interest drop in corn 4 days in a row. By the looks of the open interest, we'll call the fund liquidation light to moderate, but it is still helping to add a little bit more support in corn right now. The corn downtrend line for the December contract crosses today at 364. The December overnight did make it above that level, but we can see that we're stumbling at that downtrend line, so that might be a technical level to watch for that market. Over in beans, same story, trade headlines, they are number one, and we did have a Chinese headline overnight. That could have been the reason to provide some of the support to the beans in the overnight trade. Our headline from last night was that China will cut import tariffs on 1,585 items as of November 1st. Right now, it's yet unclear if this would affect the U.S. import tariffs at all. But again, we hear China, we hear tariffs, we hear any talk of that nature, and beans will have an immediate knee-jerk reaction. Again, we need to be a little bit cautious because we are not sure at this point if this will affect any of their import tariffs on U.S. products. Trade will remain very sensitive to Chinese headlines, so let's watch out to see if there's any more headlines from China at all this week. Over in wheat, some estimates have lowered the Australian production to 15 million metric tons. To put that in perspective, USDA currently has Australia at 19.5 million metric tons, so this is a continued sign of different analysts lowering the Australian estimate over there. Funds are estimated to be flat in the wheat, so we're not really looking for too much influence from them, unlike corn and beans where they're significantly short. Over in cattle, we already have a cash trade yesterday, 11,000 head traded at 110.50. That was reported in the north, which is most likely Nebraska. That is a steady cash trade over the last 2 weeks that could keep futures relatively calm this week, although we still want to be cautious. We did see 3 bearish USDA reports in a row here recently. The August cattle on feed, the September cattle on feed, and then Friday's cold storage, which came in at 503.4 million pounds when trade only expected 481. So right now the cash trade suggests steady to maybe continued supported cash or cattle futures trade, while those USDA reports suggest a little bit of bearish reaction here in the medium to long-term outlooks. So that's a quick wrap-up of what we have today on September 26th. Give us a call here at 800-551-4626 or visit us on the web at allendale-inc.com.